Good morning, everybody, and welcome to the Flow Show. It's BOE Day. Oh, what an exciting day we've got ahead of us. Morning, guys. How you doing?
Hello, good morning.
Good morning, good morning, good morning.
Happy BOE Day.
Happy BOE Day. I don't know if it's happy. We'll see at the end of it.
How are you, Ryan? Everything all right?
Yeah, all good, mate. All good. I'm going to go and pick up some soggy kids right after the Flow Show, see how miserable they are after spending a week in a field in the pissing rain.
Well, I don't want to make you feel bad, but we just booked another week. Third week of August, we're going to another island, so it's going to be terrible.
Steve, where's the block button in this thing? Where's the block button?
Hey, that's the one good thing we have in this country, man. We have the islands.
Hey, Stelios, have a look in the chat room. I think you should save some money. There's a nice car up for sale in December in New York.
Oh, I saw that. Yeah. Wow. Interesting.
Oh, there you go. That's the holiday out the window. I need to have a look at what this car is now.
You know, it's a Lamborghini Countach 25th anniversary. You know what the funny thing is? They used to give those away. I remember when I was working at Barclays, I had a little bit of money on the side, and they were selling those for like 50 grand, and now they go for million plus, which is crazy. Anyway,
absolutely,
it is what it is.
Yeah, definitely. Let's have a look, see if I can find it. There you go.
It's the one from the movie Wolf of Wall Street. Yeah. Nice.
1.5 to 2 million. Yeah, well, yeah. You still have change for your holiday, mate. Don't worry about it.
Yeah, if you get it for 1.5, you still got 500,000 left for your holidays. Don't worry.
Yeah, exactly. that'll pay for a lunch delivery. I'm not letting you off that, mate. I'm not letting you off that. Anyway, back to business. Apparently China, as the press have put it, have spooked commodity traders because they're probing some suspicious commodity deals. This mainly relates to the domestic market and the fact that some rat bags, so we call them, are using the cheap financing to speculate pretty much in the commodities market over there rather than using the metals commodities for proper use. So there's been a bit of a clamp down there, which, although it's domestically bound, could lead to some spillover effects, because what it's said to be doing is reducing volatility and volumes traded on domestic commodity markets, which, as I say, may have a spillover effect into other commodity markets. So might be a little half reason also why we're seeing a bit of wobbles in some of the commodities today as well. I'm not saying it's a direct impact, but might be a 2 and 2 equals 5, but it's a headline nevertheless that might be impactful. Meanwhile, on the one front, they're still setting the midpoint below where the market is currently moving. We're still up around the 720s, 719, 720s. They fixed last night at 7.1495 versus the 7.1368. So the market is pretty much moving against what they're doing at the moment, but they're not standing in the way too much yet. So there is a bit more stability, a little less volatility in this at the moment. So they're probably moderately happy with what's going on. No need to start getting anyone else involved at the moment. A ton of data out again, and we'll kick that off in China with the PMIs coming over there and the services there, 54.1, so a much better improvement. Was expected to drop to 52.5, so it beat expectations and beat last month as well. Japan as well coming in, their services, they're a little bit of a miss, but not nothing ground shaking there, 53.8 versus 54 previously. Australia, though, moving a bit further into contraction by a pip, 47.9 versus the 48 expected, down a chunk from the 50.3 previously. In Japan, Matsuno said, government bod said, FX moves bear being monitored while coordinating with the BOJ. And the BOJ popped up with some unscheduled bond buying again yesterday, probably a bit more smoothing going on in considering what's happening in yields. The headlines pop on this to say that they are popping up with unscheduled bond buying. It is unscheduled, but it's not, it's in their parameters to do so. They can step in anytime they like. So although it's unscheduled, it's not as a big surprise if and when they do, if there's moves in yields. But sometimes when you read the headlines, you can think it more than it is. Over in the UK, a bit of relief, perhaps, for Bailey and the meeting today. The YouGov City inflation forecasts were out, and they showed one-year inflation dropping to 4.3% from 5% last month. So big chunk off there in the inflation expectations. The longer-term 5 to 10-year expectations dropped a pip to 3.2% from 3.3%. So a bit of inflation expectation easing in the UK, which is good news for the bank if that follows through in prices. Probabilities for the BOE today stand at 62% for a 25, 38% for a 50, so not real much change this week, at least in terms of what's expected from the market. The bulk of the market is expecting a 5.25% rate, so an increase of 25 pips at this meeting. But we'll talk about the BOE a bit more in a moment. Some of the other data coming in as well. As you can see there, trade balance, and this is, I'm going to give you two examples now of when a trade balance looks good but perhaps isn't. So trade balance in Australia looking much better, bigger surplus than previously or expected, up to 11.32 billion. However, that comes because imports fell more than exports. So two things here. You get a better trade balance, that looks good, but look at the activity. Both imports and exports down heavily, minus numbers. So it's only by default that the trade balance improved. What's more concerning is that activity is down in both exports and imports. The same thing happened in Germany. Whoopee, big surplus, 3.7 billion more than expected. That looks really good, 4 billion more than it was last month. Looks good, but look, again, exports minus 3.4%. Sorry, imports minus 3.4%. Exports only up 0.1%. So although it's financially it's good, it's the activity we need to be concerned about. And the activity in both those, that German and Australian numbers, show falling activity, which is not good for GDP and things overall. So again, just wanted to remind people how the data can look good on one hand, but you look at it in depth and it's not good. What else we got? Oh, the good old ADP popped up as well yesterday, coming in at 324k versus 189k expected. So again, more, let's say, hopes that the jobs market is still going to remain strong for the NFP tomorrow. Another surprise on the upside. We've got that big 455k last month, big NFP as well. So again, expectations are going to be sitting on the high side for this one going into the NFP tomorrow. And don't forget our competition, which is up and running, and I'll pop the link up for that shortly. Just coming back to the data in Europe, for the rest of the PMIs dropping down. Spain services, bit of a pullback there. Italy as well, slight pullback as well, only by a pip. Sorry, only by 6. Oh, I can't count this morning. 7 pips it pulled back by. There we go. Get the calculator out. France as well, a little bit of a pullback over the flash number. Germany, a little bit of an improvement, still in expansion in the services sector there. So some small relief for those guys over there. Retail sales in Italy, minus 0.2 on the month. Not far off the flat reading there, but not exactly, again, not exactly good numbers coming from that one. The Pan Eurozone PMI final for services, a little bit of a dip there by 2 points. UK confirming the move down from last month, but no change over the flash number that we got previously. So all in all, we're still doing this. Activity is slowing or is bumping along the ground type sentiment there. Mexico, their bank board member Heath said that the central bank sees some difficulty with core inflation. The central bank has the interest rate at the correct level, no matter whether the Fed has another hike. So it's reaffirming their stance of staying on hold. Big moves in the mix today, guys. What are you making of that?
Yeah, I think there's several reasons. The main one is that risk is coming off, right? Equity markets are going down. We've seen the sudden drop this morning. We were trading very close to that S&P support, and then it broke. Then we had a technical break of the dollar mix above 17. I was highlighting this zone for a number of days, and we broke above this 17.0506 zone. Bit of if you look at the yen pairs, I think the carry trades have been at least partially seen some unwind over the past couple of sessions, and as a result, the MEX is finally catching up on the move that we've already seen in the rand in the prior days. And I think, yeah, the Banxico thing comes also, the comments come on the back of, and that's not an immediate neighbor, but it's still part of the South America continent, where the Bank of Brazil, the Brazil Central Bank, lowered their rates by 50 BPs, where 25 BPs was expected. So I guess there's a bit of correlation in several things going on, plus that carry trade, I think, is looking a little more wobbly due to lower equities, lower oil, lower commodities coming off a little bit. So it's a bit of a package there that probably told the carry traders to be careful. So we saw the break above 17 in the dollar mix on the back of it.
Maybe it's time we can start finally drawing some fibs on this chart.
Yeah, absolutely. Yeah. That's, well, I mean, it was okay to have a channel there as well. The fibs were not like we had to go back a very long time in time. There were some levels around the what is it, 1625 as well. I think that's it. Now we have to see for how long this is going to go on. If we see another drop in equities, which is possible once the US session starts, then I think this has potentially a bit more legs. 1740 is a level, and then we're talking about 1760s, and then like the big figure 18. I'm not sure where this can end up, to be honest, right now.
Yeah. But yeah, another quick lesson. This is what I use fibs a lot for, to measuring trends, to see when they're changing. And I haven't had a fib on here because every time I drew it, I had to draw it lower and lower and lower and lower. So we'll have a go this time. See if that's the bottom. If not, I'll take it off and wait for it to move again. But yeah, the fibs can give you a good indication of when a trend is turning around, and you can use them. You can pick your points. You can pick them on the different swings, the different legs. For example, you could pick a more shorter term one there. You could pick one from here. You don't want to get too much into throwing too many fibs on, but you can gauge the different points of a trend as to whether they're changing, and then match them up with a bigger trend. That's generally how I use fibs, but we can save those trading lessons for another day. Stel, what are you making of this MEX and this turnaround? Is it have we found the bottom, or just a bit of relief?
This MEX, it's really a dollar move. I mean, obviously we had the comments from Banxico, but what have we been saying for quite a few days? That the market's very short dollars, and that a relief rally is probable. And I think this is what we're seeing. And I think this is all a dollar move, which is getting a bit exaggerated, but it probably has a little bit more to go. And this is, and same thing with yields. You know, I fail to understand how a credit event, well, it's not a credit event, but a downgrade of the US is dollar positive in any way. And what have we seen? We've seen the dollar rally on the back of it. So for me, this is just position unwinding. The market had been very short. We've been talking about it for ages. And I think it's going to be a short-term move. Maybe we get a little bit further, 103, 103.50, and the Dixie is very doable. But after that, given what's happening, I find it very difficult to see how the dollar is going to keep going. And so, you know, the chart that we're seeing here with the MEX is basically when the dollar rallies, what currencies rally most? It's a MEX, it's in Norway, you know, it's all these currencies which are a lot more volatile than, say, the euro dollar and you know, cable. Add to that the comments from Banxico yesterday, just to get a little bit of an exaggerated move. How high can this go? I think probably the that 50% fib that you have there at 1793 or so. Yeah. That is probably a nice little level. There seems to be some interest at around that range, but you know, it's going to depend 100% on the dollar for me, and how much further we need to go before positioning gets a little bit more even.
Yeah, exactly. And it's interesting to learn that when you do put fibs on, or whatever text you use, is whether there's confluence with other levels. So you can see there is a bit of confluence around this 38.2. It's a prior level, you know, 1760s. Kay's mentioned it. We also got the 100 DMA there as well. So, you know, when you're trading, you look at these levels. This is what you want to be trading. Okay, if you weren't in shorts and you were trying to chase it lower, or weren't chasing it lower, you want to try getting the bounces. Well, if you're picking the bounces down here, these are your roadblocks. This is where your price might run into trouble. You know, that fib coming in close to the 18, you know, the 200 DMA moving down to the 61.8. You know, when you get these confluences, if you're in longs, that's where you need to ask a question. What am I going to do there? You know, there's no point getting in along here and thinking, yeah, I'm going to get out at 1950. You've got to get through all this first. So the question is, what do you do when you get to those levels? Do you take some profit? Do you get out all the trades? Do you trade the break, add back in, turn short? You know, that's the questions you've got to ask. But that's why we use the text. It measures the trends. It measures where the price may run into trouble. And that's what gives us our trades and our get outs. Anyway, again, enough for the lesson for today. Bank of England is the big deal this morning. As mentioned, 25 pips is largely expected from those clowns over at the Bank of England. Now, got a bit of difference in the votes. The prior vote was 7-2 for a hike. So 7 wanted a hike, 2 wanted unchanged. That's now said to be 8-1 is expected. We do have a new board member on, Megan Green. So that's the changer there. So it's going to be interesting. We might get a little bit of volatility on that vote number, depending on how it is. But it seems like she's going into the hike column rather than the unchanged column. But that's going to be a new bit of input there. I still maintain my position that it's likely we get a 25. If we get a 25, they'll leave the door open for another one, depending on obviously the data that's coming. If they go and outly a 50, I think that'll be it, done and dusted, and it won't likely be a pause if the data turns as I'm expecting it to this month, and then we're at the end of that trade for the BOE, much like the Fed, the ECB, and a lot of other central banks. So what does it mean for the quid? And I know Mike's going to be interested in this one, given his bullish bias in the quid. And this is why you've got to be careful, because, you know, we were sailing up at 128s, 127s, 128s when Mike was asking, can the pound rally into the BOE? You know, this is again one of those lessons where you can't marry an opinion or a trade into a big event, because here we are now down in the 126s going into the BOE. So regarding what you do with something like the quid going in, or any currency going into a big event, you look at what it's doing. at the moment going in. At the moment, it's looking very soft, particularly against cable, looking soft against the euro as well. So the question you've got to ask is, if you get a hawkish Bank of England, what's the likely outcome going to be in the quid? Is that going to last? If they're hawkish, how hawkish can they be to send this back to 130? Well, it's got to be something like hiking 50 and saying there's plenty more hikes on the table. That might turn you around. But I doubt that's going to happen unless the dollar is going to turn particularly. So this is all about the dollar more than the quid. So chances are, if you get something hawkish from the Bank of England, a rally is going to be sold, I'd say, pretty heavily. So that would be my leaning going into this. Unfortunately, for euro sterling, I'm a long way from getting my move down to 85 to add back in. So I'm going to just sit on my hands, manage what I've got. I will be looking at the upside, though. If the market continues this move, the big level we've got coming up is around the 87, 87.20. I would consider playing a break, adding to my longs on a break of that area there to get my further add-ons back into that position. But it's going to take something I think, to send us all the way back down 100 pips on the BOE. Still might happen, so I'm going to be ready for that if it does. What do you guys make of the bank? Got any thoughts, ideas on what Bailey might be up to today?
For me, I agree with what you say about what might happen. They might do a 50 and stop, or a 25 and indicate another one. I fear I have this fear when the market is getting a little bit one way, and I've talked about this so many times, and everywhere I read, everywhere I see, everybody hates the pound now. So I'll be very careful. But I think they're going to do 25 and leave the door open for more. And that's what they're going to do. I think for choice, the Bank of England has always been full of idiots. Can I say that? I can. And they've always been more dovish than needed. It's been a pattern for many years now. But on this occasion, I find it a little bit harder, given inflation. Yes, it's dropping at a bigger pace than was expected last time, but it's still high. Given the whole situation, I find it difficult to see how they can be more dovish than the market expects. And we are pricing 25, right, with a small chance of a 50, if I recall correctly.
Yeah, 62%.
Yeah. So I think they do 25. They leave the door open for more 25, maybe 25s. And they try to be as neutral as possible. That's what I think they're going to do.
Yeah, thanks, mate. Kay?
Apart from being a little gutted not to go into the Bank of England meeting with a much stronger sterling to sell into, I think, yeah, if they do 50, it's going to be the last one. If they do 25, then they're going to leave the door open. But then I reckon they are just in the same boat now than all the other central banks. And having sold off already in the sterling, well, you know, as Stelios said, everybody's now bearish sterling. I think bearish sterling is not a trading strategy; it's a lifestyle over in the market.
Yeah,
the market just loves to sell stuff, right? No, but no, seriously, I think it's now much less. Looking where we are, it's much less. I should say much less a sell on the overshoot, because we have done already a fair part of the move. Yes, it's related to dollar, but if you look at the euro sterling, is about 1% higher from the lows already, and we are already tackling some levels in these low 86s. So yeah, I don't know. Now I have to say that I'm going into the meeting more balanced than I was before. I still got an idea of selling a rip higher if it would come on the back of the Bank of England decision, but much less so than I would be if cable would be trading at 128 or 128 now, for instance, and euro sterling in the 85s. So I'm a little more balanced now going into the Bank of England than I was until yesterday, really.
Yeah, thanks, mate. And Mike's just popped up to say that I convinced him to get out of his cable long above 128 and turn short from 128. Well, I hope I didn't convince you to change your trade. I hope I gave you, or we gave you, enough analysis and information that you can make a more informed decision about your trading. That's what we're here to do. I'm not here to tell anyone to, you know, get out of trades or anything like that, unless they're doing something really stupid, and then I will tell you flat to your face. Yeah, you know, it's about weighing up your opinion, everyone's opinion, everything going on in the market, and hopefully, you know, you get better trading information, as I say, to make those decisions. So you know, you're not stuck in one bias when other people are pointing out that something's different or could upset that bias. So that's what we try and do here every day on this show. So I'm glad it's worked out for you. I'm glad you got a nice trade. You can buy us all an ice cream if we ever meet up, mate. Right, just looking at a couple of other things. I've been knocked out my dollar yen. That's looking a bit weaker today. Part of there seems to be a bit of a risk-off mood going on, and it's not lifting dollar yen as it might do sometimes. So this one's had a little bit of a blow off the high that we saw. Got a bit of a high this morning, broke the prior high in the 50s, got up to 143.89, nearly 90, and then it's pulled all the way back again. We are into a bit of a support level. I did take a knock on the break. Along on the break, sorry, when we broke through 143, I was long at 143.15, managed to chip some off in these highs, didn't quite get as high as that, but now I'm out of my trade, obviously the low of the day, of course, but we've got a bit of an area here now, short-term support, which was a bit of a resistance area on the way up around 142.80. We're under, if we hold under 142 at 143 now, likelihood is that we do get a further push lower. 142, 24, 25, call it, this area is my main support level. If we crunch there, you've got 141, 141.95 as a bit of a line in the sand. Under there, then it might start to look even uglier. What are you making of this yen move, Kay? Because it's not, you know, it was sailing pretty in terms of the risk factor earlier this morning in Asia. Now it's flipped right around.
Yeah, it's the European Open. The European Open market sold equities off, and all of a sudden the floodgates were open. I think the carry traders are starting to manage their books, feeling a bit nervous, and that's what is going on now. Now, if you take it in pure dollar terms, we did that little bit of an overshoot above the 78.6 in the trend line in Asia, and now we are 50 points below again. We're still up against 143 in the dollar yen. We're not trading 140 or so, you know.
Yeah.
So there's going to be support on the way down. On your blue line there, that's an interesting one for starter around 142, and then or perhaps it was just as well people leaning against that 78.6 because we topped there twice on the prior sessions and then got stopped out on the way higher. I actually tried to buy the break this morning, as the people in the room will know, but then as usual, I started to slice relatively quickly, and then on the break back below 142.30, I went, and 30.35, I went out of it, and 43, sorry, and it didn't cost me. But yeah, I think it's really the equity markets and risk taking a knock on the head. Now, this being said, a risk. We saw it in the emerging markets, but what is funny this morning is that stuff like Aussie and Kiwi, they are not bouncing a lot, but they did not accelerate to the downside when the yen crosses were sold in our European morning. So that, I think, may be a little bit interesting. It seems that different risk instruments are behaving differently, perhaps depending on the time zone or so. But yeah, I think it's something that tells me that risk is not completely dead yet, you know.
Yeah.
Stuff has moved, the rand, the mix. But then if you look at China, for instance, we are starting to refuse the 720 and above. So I think we've got to be a bit careful with what's going on today, and I guess tomorrow as well into the NFPs. That may be another risk driver. So I'm going to say that we are probably going to range more in dollar yen than take a clear direction. And then tomorrow may be the kicker. You know, if all of a sudden we got a bad a labor report out of the US, then there may be a bigger setback in the dollar yen. Until then, those yields are which are still trying to push higher, are probably going to prevent it from falling out of bed. So more in a bit of a rangy stuff. But once New York comes in this afternoon, there may be another leg in this, especially perhaps in the emerging markets like rand, MEX and stuff. Another leg, and then we reassess what's going on. Another one that took a knock on the head was the Norwegian kroner, which was coming down, and the CAD continued to push higher. So yeah, the market is very careful with risk right now.
Yeah, it's a bit of a mixed picture. I don't know, maybe for the Aussie, that China news was a bit of an impact, you know, given that they're such a heavy commodity related country. Who knows? It feels, I often use the term washing machine, when there's lots of things going on and you can't really pick a thread that will lead you to one outcome that's driving all the markets. There's lots of threads that are being pulled at the moment. And that's why we rely on the levels. You know, if you don't know what's going on, you look at the charts, you pick your points, and that's what you trade. But you know, like cable's moving far quicker than euro dollar at the moment. Euro dollar half asleep, it seems, right now. Not getting through this 109.15 zone. Bit of tech confluence coming up here. We've got the two moving averages bang in this area here. It's also a prior support and resistance point. So got a bit of traffic there. There are some options expiring, decent size options expiring today as well. Those of you in the chat room will know how many of those are, quite a chunk, which also might be keeping the price around this area, not letting it stray too far. So that might be something to watch going into the roll-off time, 1500 GMT or BST later today, just to see if this pair might be a bit of catch-up. I mean, that's something I look at for the options. If the dollar's moving strongly against all the other pairs, i.e. Aussie dollar's lower, cable's much lower, but euro dollar's holding up well going into the expiry, then that's something I might look at to play a catch-up trade. So I'd sell euro dollar after the expiry just to see if it catches up with the rest, and was it the options that are keeping it pinned in place. But anyway, that's something to look at later. Still, did you have anything to show us today? A couple of things. Did you want to look at stocks or anything?
Yeah, I can show a few things. Sure thing. Let me take the charts. So the main story is, well, there are two stories. One is the dollar, the other one is yield, and they are related. And remember, we're talking about this high here being important. The next one in the 10-year US is 433, 434. This is as I said before, I think this is dollar driven. Bit of a short squeeze, lots of confluence around here, 103 to 103.50, let's say. I think this is where it stops. And if that happens, then that means that yields probably stop before these highs and then we reverse. But of course, anything can happen. And this is my view, but of course, you know, I can't be 100% sure about what's going to happen. Otherwise, I would be Ryan. So dollar and yields are rallying. And what, as I said before, what makes me think and what worries me is that there is no logic for the dollar rally following the debt downgrade of the US. So that's one of the main reasons why I think this is a purely positioning move that can have a little bit more legs, but then it's going to be reversing. And, I was reading the stats on the US debt yesterday. Incredible. They announced 1.8 trillion more borrowing for the second half of this year. And yes, of course, people are going to say, but the US has a very, very large economy. But if you look at debt to GDP, it's going up now to levels that used to be only for countries like Greece, 120+% now, and that's going up. So fiscal situation in the US is not good. I'm not saying that other countries are better, but the US traditionally used to be strong, and now the last, say, 10-15 years after 2008, it's all gone downhill. So what does that mean for yields in the dollar? Well, yields, they have a reason to go up because there's going to be a lot more issuance, but I think my view is that the Fed is going to be jumping in relatively soon and starting to put some balance and some to kind of appease the markets, because interest payments are now a huge part of the debt issuance that they're issuing. So they're issuing debt to pay interest payments on existing debt, and the US, they really cannot afford, with this debt pile increasing so rapidly, they cannot afford to have high yields. I mean, they have to bring them lower. So I think the move for the 10-year US 10-year yields and the dollar is going lower, but of course this squeeze, we talked about the possibility of it happening, and it is manifesting. So what does that mean for stocks? Well, yesterday was not a very good day, but again, there's no real evidence that we've broken, that we're going lower. I think we need to see this level here, 44.60, 44.65. I've talked about it yesterday or the day before, whenever it was. That will probably coincide with this trend line support. So when that happens, actually, let's do this as well. Let's see. So you have the 23.6 and the trend line and the DMA, the 50 DMA, and this area here was of some interest before. So basically, you have a very, very clear, let me draw that so that I have it as well. You have a clear, at least in my opinion, a clear area where you really need to be thinking about calling this a bear move. So until we break these levels or this area around here, I am not going to change my opinion. And the pullback on this rally is more than logical. And if what I said what will happen does happen, which means the yield dropping and the dollar dropping, then that's going to also bring support to equities. Metals, I always look at metals, that. Gold has been trading actually quite well, given what happened with the dollar and yields yesterday. 1930 to 1935 is a very, very, very big level, and that showed yesterday. We are holding here. I think for choice, we'll probably break lower because I think the dollar has a little bit more, probably, as I said before, 103.50 in the Dixie. So this 1895 will then come into view. That needs to hold. If that doesn't hold, then everything has changed, or not everything has changed, but then I'm going to be reconsidering what I think about metals, at least in the very short term. In the medium term, I have absolutely no doubt that we're going to be going a lot higher. Silver, I'm still long 2/3 of the position. Remember, I got out of a third at 24.58 or something like that. I can't remember the exact level. And I'm looking to buy that back. I still have the 2/3 from 23.09. There is a little bit of confidence around here, the low 23s. I might buy that back there. $1.50 on a third position is nice. But again, it will depend on the direction that the dollar and the yields have been taken. And it also will depend on the speed of how quickly we get there. But otherwise, I don't have anything new to say, really. The euro dollar is the opposite of the Dixie, so I think we have a little bit more to go. A little bit of confidence down here in the low 107s. But for now, it's looking. There's quite a few expiries at 109, right? If I recall today. Big expiry 109. Yeah, so that's probably going to be a magnet there. But I'm going to start looking for longs on this in the low 107s. That's it. I'm not really giving any new information, just going through the charts as I have them. So I'll give it back to you.
All right, mate. Okay, you got any choice pairs you want to have a look at?
Why you want me to look at a bit of sterling or
Yeah, you can do. Yeah, you got a few more lines than I have.
You want me to look? Just on those levels, you know. There's a bit of a trend line broken here in the cable when we went back below 127.40, and 126.80 was a bit of a level. We're already trading below. It looks as if the market either was long sterling or just pre-trades the Bank of England already. Bit unclear. But if we get below this 126.25, there is a chance we are getting down to the 125s. But then I guess the dollar should help as well. I'd expect that if on any rebound, if we get up to the 127.40-60, there should be some activity over there. And I reckon if we get up there, perhaps we're seeing some supply for a starter. But if we close the day above there, then I would argue that perhaps we are going to trade this kind of channel again. So it's going to be, as usual with the Bank of England, an interesting one. Also, the Bank of England, just for the statement and the talks, we should pay attention to what happens on the QT front as well, to see if they announce anything there, which would give a bit of a hint on how the sterling liquidity will move forward. They didn't inject as much as ECB, let alone the Fed, but still, it can have a little effect on what's happening. Right, euro sterling. I think this 86 10-15 zone is going to be our measure point for the end of the day after the Bank of England. Below or above, maybe important enough. There's a little bit of a trend line coming in here, but I don't think that has got much to say. Looking at this 55.60 as well, but then the big zones, 87, of course. I'd say 85.40s, and then of course everybody knows 85. That for that. One pair which could be very interesting, looking at how risk is behaving today, is sterling yen. Look where we are. This is the level where which I highlighted yesterday as well, the 181, and I reckon that's going to be it's a bit similar to your 86.15 in euro sterling. 181 above or below may be the decider for what's for how this pair is going to behave in at least the next 24 next couple of sessions. That for that. And then we've already shown a little bit what's going on here. The one thing interesting though, and you know, yesterday I had this trend line here and it was broken, but if we go back and we just take the two prior tops, the trend line doesn't come in before 722, and then there's also a bit of activity in the past, and there's also a fib, and we actually tagged this little spike high here from the 24th of July, and it's coming back down. So I think we have to be a bit careful with what's going on here in dollar China. It may have ran its course. It possibly may have run its course for a little while. The rest already been discussed, and back over to you, Ryan.
Thank you very much, mate. Yeah, I was just answering Mike. I was typing it, so I might as well read it out now. Just asking, do I expect Bailey to be neutral at the presser? It is a bit of a tough one because he was a self-confessed reluctant hiker all the way through this. But then they had to step up at the last meeting with that 50 and acknowledge the problems they face, which, as I said at the time, put them where they should be rather than behind. Doesn't put them in front, and they're still not in front, but they might be close to, again, staying on a level. I don't think he can reverse that sort of rhetoric completely in this meeting. You've got to be on balance that he can never talk really hawkish. Even when he's hawkish, it doesn't even really sound hawkish. So I expect that to continue. And it really all depends on how they see rates, whether it's one more to come, one more and done. So neutral, possibly, maybe a touch hawkish, but sounding dovish when doing it. So I hope that probably doesn't help you, because I've covered all bases there, but I hope you get my drift. It really is a bit of a coin toss as to how he's going to come out, because there's always what he should do, what he will do, and what he may do. What do you guys think? Is he going to be his dovish self again? Is he going to send the pound lower, guys, do you think, when he talks, or has he got to keep the momentum going from the last meeting?
He's already weighing on it, you know, even before he talks. Yeah, I don't think that Bailey can change really. He's not even a central banker. He's a regulator, right? So, and the regulators, they can't be hawkish.
A bad one at that. Yeah.
Huh?
A bad one at that.
Yeah, he's well. I mean, everybody knows. I've since he arrived, I always said this is in my top 3 of the worst central bankers I've seen in my life. And that's not going to change today. So yeah, cautious. But the one thing, because we're traders after all, that we have to acknowledge that the last 2 times he spoke, after he finished talking, the sterling actually went up. So
he broke the mold.
we don't. Yeah, we are not going. It's not 100% record anymore that when he talks, sterling collapses. But yeah, I mean, look at the move. We are already quite a bit lower in sterling, and that really puts me neutral now, and bit of an open play, I think, in the into the Bank of England. And if you look at sorry, just to finish, if you look at the data in UK, yes, there are weaknesses, but weaknesses are everywhere in this market, and they are relatively similar to where they are elsewhere, perhaps a little accentuated on some. But if you look at some of the data, they are not falling out of bed. The latest PMIs, they are not really as bad as everywhere else. We still have to take that into account, right?
Yeah, exactly. Right. Well, my 2 last points on the BOE is, I think, on balance, I'd be more a rally seller in the quid than a dip buyer. As for Bailey, he's all 3 stooges rolled into one. And to finish off, I've just popped up the link to our NFP competition there. Don't forget, click the link there, enter your guess, win a free month on our platform. Get your guesses in before tomorrow's NFP. Right, that's us done for today. Tomorrow we will find out exactly how much Bailey mucked it up, and we can all laugh and joke about that tomorrow. So have a great day, everyone. Stay safe over the BOE and the rest of the day. Trade well. Thanks to Kay and Stel. We shall see you all tomorrow.
Great. Well, thanks to Kay and Stel. That rhymes. Nice. See you guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.